Hey guys, a very interesting day today. We had, so this is John, obviously. Welcome to the free video. And a very fun day today. We had some good action early this morning in the indexes, early this morning in Tesla, hit our target there. We were able to flip that out. And then from there, it was just hurry up and wait for the Fed meeting to come out. And once that came out, what was fun with this is that we're able to do a lot of index-based trades. In fact, let's take a look at this on a 15-minute chart. There you can see that. And then if we align that here, well, actually, I'll set this up and you guys can see what I'm talking about here. So on Fed day, when you've got a big tick spike, which by the way is great. So when you get, it's like, you get the big spike up, right? It's like, oh, you get the big spike up. And then you buy the first tick reading under zero. Okay, so here it goes. So that's a nice pullback, and then you can see boom. And that's a very, very steady setup. And what happens is when you get, there's been a lot of times this year really where the ticks have been really, really quiet. The market's been choppy. And in those situations, what I want to do is look for individual stocks that are doing their own thing, that are not, messing around with the markets because the markets are doing nothing. But on a day like this, when the internals are extreme, okay, when the internals are extreme, the indexes are the easiest to trade because this is telling you exactly what's going on. So, you may get a day like this where maybe Tesla's not responding to the market, but the index, this is like the EKG for the index, okay, and that makes it a lot of fun. So on days like that, you can do things like trade the indexes. We did the S&Ps, we did the NASDAQ, but you can also do things, also in this case, we did also calls on the Qs and things like that too. So that's fun when it happens. When it doesn't, we focus more on individual stocks. One stock here I continue to like here is Momo. Added some more profits today. This is one you can see I got the options a little bit longer term, and that's something that I want to hold on to for a little bit longer as well. So what about for tomorrow? For tomorrow, I'm expecting the markets to go back into chop mode. It is monthly expiration. We did do an earnings play on Oracle, so essentially just sold puts all along the board. If we open up around 44.50, give or take, we should be in good shape. That's $1 above our highest put there, so that looks good. And then from there, we're just setting up with some earnings plays. It's time to start ramping up for earnings. In this case, Netflix. Netflix, we've got those options 44 days out, looking for an expansion of price and implied volatility. And then from there, it is all about the pin, okay, and about the open interest. And that's kind of why we're doing some put spreads here that are 2 days out. We're doing that on Netflix and a couple of other stocks as well. Okay, and then the other question I got a lot today was, well, the markets are extended now, so they can't really go any higher. If you look at where we are in terms of 3 ATR, the Qs won't even hit that until 133.04. So that's another healthy move today. I mean, today it moved up 78 cents. That was, 0.6%. So we could move up, about another 0.8% or so, which is a decent move. And from there, I would certainly be taking profits. Okay. So one thing that's been popping up and people always ask, and it's like, all right, so this kind of market, it's been different. How are you doing this year compared to last year? And this year has actually been, it's been accelerating faster than last year. As of, the time that this copy was written, my account was up 98%. It's actually up higher than that after today. We had some good moves in Tesla and Momo. But what I found with this, and I'll show you something real quick, it's a cool little tool, is that while there's a couple of different ways to kind of accentuate a setup, but really it's like once you find the setup, it's what is the best option strategy for that stock, okay? Not the setup for that stock, okay? That's a little different, right? So let me show you an example. So check this out. So if I get a bullish signal on Priceline, okay, I could buy Delta 90 calls, buy Delta 60 calls, Delta 50 calls, Delta 40 calls, Delta 25 calls, and you can see that over time, none of those work, okay? The 25 calls, the money calls, lose the most amount. That's not a surprise. And then the 60s and the 90s, a little bit different there. So that's, okay, it's like, all right, so if I've got a bullish setup in Priceline, I shouldn't even buy calls. Whereas with some stocks like Tesla, actually buying calls does make sense. Now, with Priceline, going back and looking at those same setups with a different strategy, all right, you can see that instead of losing, whatever it was, you're making 139%. Okay, so on a one lot, this is based on one contract. 107% doing it this way, 107% doing it this way, 93% this way, yada yada yada. So anyway, I thought that was fascinating because what I did is just like, all right, on this stock, if I've got bullish setups, and I buy a call, it's like I could lose money even though the setup was right, okay? But then if I did this strategy, it would actually work perfect, as you can see. So anyway, that's the deal. I'm going to do this webinar. I'll show you guys my statements and all that kind of stuff too. And you go to simplertrading.com/rapid. It's a free webinar. It's going to be coming up next Tuesday, March 21st at 7 o'clock Central. And just going to cover some kind of cool stuff that again, hey, here's a good setup. What's the best strategy for this particular stock? Okay, and for some, buying a call is fine, like a Tesla. Some, like Priceline, you could have a great setup and you still lose money on it because you're doing the wrong strategy for that stock. Okay, so isn't that crazy? Anyway, it'll be fun. That's it. So you guys have fun, and we'll see you on the webinar on Tuesday.